All right, you're alive. Have a good show.
Yeah, it was VHS and Betamax. Remember
Yes,
Betamax?
yes. I remember the creepy the first VHS stores were. I mean, that really was. They were really truly driven by porn. Like half of the store would
Yep.
just be kind of have a little
They
curtain in
had
front
that
of it, and no kids
they had
back
that
here.
section
And
over in the back with the dirty curtain.
right, right, and the section slowly just kind of it just shrunk over time. But yeah, the early stores, it was like half of that was the section. That was your store. That was that was Blockbuster just came in and said, it would probably be more family friendly, is less porn.
Yep. Let's
I
try
just
that.
went to a speakeasy in Times Square. The entrance was designed like a 1980s shop of that variety with all the VHS tapes and everything. And you kind of switch through, and there's a bar behind it, but it was kind of like a time capsule into
Yeah,
what I used to see as a small child as I tried to go to a Broadway theater and was bombarded by that kind of video store.
there you go. There you go. Delicately handled. That's where I was going to take it as well, as opposed to a deep dive and some thoughts on the stages of
Yeah,
pornographic content. We'll
All
save
right,
that
let's
for
get
our
this show on the road.
OnlyFans.
Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined today by our comms and retail pro Barnum Barchet and Jeff Mackey, another retail pro. We got another deal in Iran today, unless you've been under a rock. Just like Marcin said, we're going to get a few more deals and we're going to get a few more all-time highs. That was what he was telling us last week. And then, Jeff, I don't know, are you a Spider-Man fan? I never thought Spider-Man was this kind of franchise. Holy crap. Look at that thing did over the
Yeah,
weekend.
I'm a consumer guy, man. I'm less a retail guy. It's over and over just in love with them. And this was one of those deals where, kind of justifies my existence of just going through life looking at stuff and seeing what people are doing. And man, Mrs. Mackey was out of town last week, and I'm at the age where it was fun for me to just go out to the movies. So I took a boys group to the Odyssey and went and saw the Spider-Man all by my lonesome on Saturday, packed. I mean, and the type
Wow.
of buzz, and then kind of looked into the financials. You know what's really working this year, Steve, is the bottom half of the top 10. There's just a lot more depth. There's a lot more kind of adult movie type of selections out there, and so you go
Yep.
with kind of The Offer, an adult comedy, and versus Ant-Man Quantum Menace, which is playing last. I mean, we're seeing
Yeah.
better films than we were in prior
Yep.
peaks. And that's
Stuff
all
that we
playing
would
to a
go see.
consumer that's willing to spend more. Well, it's
Yep.
consumers are willing to spend more at that demographic. It turns out the adults have the money, and with the exception of the big event kind of kids films, what IMAX has kind of proved would help them make the leap was that this is a business where all films kind of look better in that content. And so they only have 25 theaters, but they're selling the projection and some of the technology out to different screens. It's all part of kind of people socializing, redefining what works in Hollywood, and they're figuring it out. And they're figuring out the content, and people like to sit in kind of reclining seats, as opposed, again, they have to be better than the living room, or at least as good.
Yep.
And the truth is, it's a lot more fun to watch a comedy or a horror movie in a theater in the company of 200 people than it is sitting on your couch. But
Yep.
just don't make
And
my
you can put
feet
your
stick
phone
to the
away
floor.
and just not, just disconnect.
Just be at the movies, and that
Yeah.
experience is still worth something. This is one of those, it's the same kind of bet, Steve, as Simon Property Group. And people just love to say, we never go to the mall. What the hell's the mall? No one does that anymore. Well,
Right.
it's at an all-time high, and as near as I can tell, their business is malls. People are social. They don't like to admit it, but if I can take the other side of no one's leaving the house again and figure out how to make money from it, I will. And
Yep.
so, Spider-Man was fine. It was cromulent. I found the Odyssey to be another Christopher Nolan movie. It's like,
Not sure what that means.
entertaining.
Is that a good thing?
I was a
bad
film
thing?
studies major, and I spend half of those movies just baffled as hell. Just kind of going, I've actually read the source material, and I don't know what the heck's. I mean, it's hey,
You
there's
don't know what's going on.
Spider-Man. But that's fine. I get it. Like, it's an impressive kind of achievement, and it looks a lot better in fancy films. You've seen the luxury theaters, Marcus and IMAX are kind of the purest plays on that, up 100% over the last year. It was something you could see coming, and it's a breakthrough that continues to pay. Now, their customers are companies like AMC, who do they have the cash to install the tech? How's the popcorn futures market or whatever the hell business they got into doing? But there's a clear kind of move towards that affordable luxury. Nothing super pampering, not a 4-star hotel, but something that you can either pay $10 and your feet stick to the floor, or pay 30 and you can actually recline in your seat and be blown away a little bit and be surrounded by people. Customers prefer the latter. So, which is great. The moves have been too much. It's the move in Amazon, the move in Target over the last month is 20%. All these stocks that, fantastic moves going straight into earnings. That is freaking terrifying to me. Berna and I have been doing this too long to think this stuff goes on forever. So, I'm trying to
Any
kind of find
read-through
stuff
on
to sell.
Bezos's big sale? Did you see Bezos sold $4 billion worth of stock? Yeah, was it yesterday? I saw, yeah. Bezos being Bezos.
He does that. He does that every quarter. He sells kind of all the time. Start quantifying stuff. They did a good enough job of that. Whether it holds, I think the bar goes higher and higher on quantifying your CapEx targets and why you're spending all this damn money. But AWS grew 37%. That's a really good answer. It's like, okay then. Well, that explains the 200 billion. That's good. Nice number. And so I'm not sure how much creep you get. I think that the stock's been flattish for 3 years before this kind of breakout. I think that was due to more internal questions than it was Bezos selling the entire time, which he was.
Yeah. All right, we had Snap, I think, overnight. Berna. We had what else did we have? Spotify. We had McDonald's. We had Wayfair. What do you guys want to talk about?
Well, actually, what I was going to talk about was from last week, from Thursday night, is but I haven't been on since then, is Reddit. I think is very interesting here. So this is a company that's been growing 60% year over year for many quarters now, and really the fastest growing thing in kind of ad tech land. And it's trading at about a little under 25 times this year's earnings. To see, and I think that there's been, my take on this is I think there's been an overreaction. So the big controversy here is that, it was a clear beat and raise on every metric: revenue, EBITDA, operating margin, monthlies. The one thing that was a slightly weak number was the DAUs, which is daily average users, which went from 53.5 million to 53.2 million. So the concern here is that with AI overviews, that both OpenAI and Google pay, I think, something on the order of magnitude of like 75 million a year to scrape the screen of Reddit and be able to give you a summary of what's going, what was in the Reddit. Anything, you can get information from the Reddit forums. So there's this concern that even though things are going great now, that ultimately they're going to be disintermediated by the chatbots, by the LLMs. This is one of those like kind of predicting the future things that gets into art more than science. But I think that the people thinking this have not used Reddit, because what Reddit is great for is, like, say you went to the Odyssey and you had some take on one of the characters, and you think it wasn't, sort of loyal to what Homer meant in the original source, like you can find like 300 comment deep, thoughtful dissertations of people who have studied Greek literature and seen the movie and get into it with them. And, if you're, I think of Jeff and your intermittent fasting. If you want to talk about people about the benefit of going to hour 37 versus hour 36 on a fast, you're going to find like dozens of people who want to talk about that. And so I think the beauty is in the details, and it's a form of entertainment, the way that like early Facebook, before it was like overrun with like sponsored content and influencers and stuff, was about checking in with your friends. This is checking in on deep niche interests, like whether they're about, film and entertainment, or about, dieting and exercise, or about choosing a car insurance, or, you scraped your knee and what's the best way to prevent a scar. Like you can always get a summary of any of those things, but this is for people who want to be in the details. So what's interesting is the monthly average users went up, and it was just the daily average users that dipped. My suspicion is that this isn't an everyday thing. It's like putting on a TV show, right? Like you need time for it. So you may only, they don't give you enough information to really know. But when I talk to people about how they use Reddit, they don't use it like every day, but they use it deeply, and they have long sessions. So like, is it better to have somebody on for 5 minutes every day, or to have them on for twice a week for 45 minutes? I would argue the latter. There's more chances for
Right.
ad impression. So I think that it's easy to sort of take this narrative and sort of jump into some kind of conclusion, but I think it's being made by people who haven't actually used the service and sort of understand how deeply entrenched and loyal. There's also like quality of visitors, right? Like, there are people who are, sort of, there are people who would sign up to moderate all these forums. So, I think it's just a general misunderstanding of how consumers behave. And even when you look at, what's happening with Google search, I mean, we're in a world where everything is a derivative of AI, and what's AI going to do? And we're all thinking about AI, and everyone's trying to figure out how to get AI into their workflows. The average person right now is still Googling when they need to find out, what time the movie is, or, what year did this was this book written, or, what's the weather going to be tomorrow? Most people are not going to Chat GPT or Gemini for that yet. So the combination of sort of a misunderstanding of how fast consumer behavior moves and a misunderstanding of the use case, I think, has led to this bear case. And so you had this stock go down 20 something percent on Friday. And then yesterday it rebounded about 10%, but it's still down significantly on, what I see as one of the cleanest beat and raise quarters that I've seen, because of a fear of a boogeyman that has yet to come. And I feel like a lot of Wall Street, do I think that like, 40-year-old guys on Wall Street whose primary interest is golf, have a lot of reason to be on Reddit? No, but it's not for them. You know what I mean? It's for people of other interests.
How could a company burn out? And I don't follow Reddit at all. I'm a complete user. I wormholed Peloton output during the Tour de France, which was, but I did it exactly the way Steve said, where I went through, I think it was chat, and was asking about that. They cited Reddit research, where it turns out some guy in Germany spent 6 months of his life charging wattage on Peloton bikes. And, I mean, it's to your point, it was exactly where I wanted to go to scratch that wormhole itch. But there is definitely going to be a compression of kind of day-to-day users. A year ago, 2 years ago, 6 months ago, I'm not sure, when I switched over from just not going to Reddit as a primary source. I mean, that's going to change their business somehow. Does the company have like their arms around how that's going to look? Because I mean, the boogeyman's only scary if you don't know what it looks like, right? Or I mean, at least it's a lot scarier. Unquantifiable risk is bad? How firm a grip does management have on kind of what's that going to make the business look like? Because it will, to your point, be the best deep dive online, but it's the chats will get better at it as we go.
Right. Well, I mean, I think that yeah, there's definitely going to be people who just want the answer, right? And the answer is going to come through like a chatbot scraping. And I would argue that they're probably undercharging, and I don't know how long the deals go, right? So there's different levers. The lever of charging, you own data, you own information, and charging more for that IP, right? So that's one avenue. And then the other avenue is continuing to monetize the people who don't want the answer, but they want the experience of, really going
They want to
down,
geek out on the debate.
Geek out on the debate. Exactly.
Yep. All right. So you buy it here. You're buying this dip.
Yeah, I think it's a buy here. I mean, to me, it's like, how I always say, like, a company isn't staying at 25% of sales. Like, it's either going to go bankrupt or it's going to go up eventually. Like, with the retail and consumer names, like 25% of sales is never the right answer. It's either going to be 0 or 0.6, right? And I think with this, like, a company that is, growing at 60% profitably, with good incremental margins, and is trading at like, less than half of that as a P, with such a low peg, it's not going to stay like that. And I could be wrong, and they could get totally disintermediated, and then you're going to get Trade Desk, right? And, it's going to go down 60% and not 40%. But it's already down 40% this year. And, I just think that there is there's dual use cases, but I think that MAUs is a better measure than DAUs here because of the nature of the visit.
Okay. All right. Let's. Did you guys see Snap or Wayfair or McDonald's? Any thoughts on those prints?
I'm amazed people pay attention to. I think Evan Spiegel's just a good-looking kid who kind of shows up nice and stuff. I don't know why people are still talking about Snap. I found it telling that he, a guy married to Miranda Kerr and famously kind of a handsome guy. The Snap glasses are so bad that he refused to wear them on air, and they cost $2,100. That's a problem, because if he can't pull those off, I'm not super confident that I'm gonna pull them off, or I necessarily want to die on that hill. So Snap's a really weird company. It's always a little surprising when they report, because it's like, wow, they're still here. It's like MySpace reporting.
My kids still use the service, but
everybody uses it. I've been a perma bear since the IPO, and a few times that's been bad, but 90% of the time that's been right. And I think the problem is that its niche is, whatever it is, like, call it like 12 to 22 or something. And, with like greatest concentration, probably like high school. You're monetizing. How do you monetize people who have no money and no agency? So on the one hand, like for brand advertising, that's like a time in life where you really want to get in front of somebody. But in terms of performance advertising, what do these kids have? $20 a week to spend. Like it just at a high return on ad spend kind of tool. And then at the same,
She freeze on us?
Is it me or is it? Nope. You froze on us, Myrna. You're back.
I was just saying that it's hard to monetize people who don't have more money, who don't have much money. A bunch of kids who have $2 a week to spend, and then on top of that, they're fighting TikTok, which has a better algo, is more compelling, has more time online, and is executing well with TikTok Shop. Really seamless and shopping experience. So long ship times a lot of the time, but it's like you have somebody going after the same demo better, and it's not the greatest demo to be going after. So it's going to have 15% days up, sure, but like you
All
know,
right. So
not a
no
great business
touch,
model.
no touch or short the rips.
What's that?
I said it's a no touch for you, or it's a short the rips.
Yeah, it's just not that, I don't like the business model at all. So it's hard to get excited about it,
Yep.
It's a walk away.
All right. Jeff, did you see what was the country singer who gave away he gave away a cruise for two to everybody in his audience? Did you see that headline the other day?
No, I didn't.
So
That's
yeah, so
amazing.
between that and like Shaq all over Carnival Cruises, I'm thinking this cruise business is here to stay.
It's
And gaining
unsinkable. I
momentum.
like Viking in the space. Carnival kind of can't get out of its own way. It's just hyper levered and absolutely the headline company of every debacle you can possibly see. It's
I think that's the one Shaq is behind.
Yeah, he is. And Shaq is amazing. I would not underestimate his Shaqness, but man, those are awful big boats. So, I don't know. They're unsinkable. Norovirus, it doesn't matter what they throw at these things. It's no one cancels their cruises. I think it's just a business where every time they report, they get little pops because it's like, wow, business is great. And then everyone just sits around and thinks about how it has to get worse someday. But,
well, not
of all
Norwegian.
the-
If you looked at Norwegian the last year, I mean, it is just, you say Carnival can't get out of its way. It's Norwegian that is, the other guys are comping +2, off of 2 years of really strong comps, and then Norwegian's -5. They just lowered yet again last week. But that's an interesting turnaround situation to watch. I'm not involved, but talk about not making hay when the sun is shining. That company is the poster child for that right now.
Could you put the two together, Carnival and Norwegian?
I think there would be antitrust problems with any further mergers in the big guys.
All right. All right. Anything else you guys want to cover before we wrap? We got 3 minutes.
Nope, just hey,
Nope.
Thursday when they report, Berna.
I'm sorry, I didn't hear which one you said. You broke up for a second.
Are you following Real?
Oh yeah. I mean, I've trimmed,
Tomorrow?
Thursday, I think.
Thursday. Okay.
Thursday, yeah. I think it'll be good. I think it's a good.
I think it'll be fun.
Jewelry sales are strong, and I think they've got a really good niche. I still love the product. I mean, I think they just grow into it, so it should be a good market for it based on what we've heard.
They're benefiting from what I heard the term greedflation recently. They're benefiting from the greedflation of the European luxury companies because it's gotten so. I mean, they've kind of stopped this year with the pricing, but there are bags that were $5,000 in 2018 that are $10,000 now. Their cost of making them has not gone up anywhere near 2x. And, people are just disgusted by it. And even people who can afford them, if you're rich enough to be able to afford that, you're rich enough to know when you're being ripped off. And, I think that, people are turning to, just out of disgust, because people, it's like you're getting inflation on everything. And then, but if it's like, if you're like me and your air conditioner broke, the fact that your new air conditioner costs twice as much as one 5 years ago, yeah, that sucks, but an air conditioner, right? So, that is not so discretionary, but do I really need another bag in a different color that is twice what I paid for it 5 or 6 years ago? Probably not, but Real, is a great place to go to find, the same thing, lightly used. And, I've owned this since it was $1. I've trimmed a lot along the way and various spikes, but I still have a decent position in it. And I don't even sweat the quarters because I'm playing a larger, consumer behavioral trend, which is the normalization of thrift, the normalization of used products, but the persistent interest in a lot of these brands that they sell. And the fact that they're not tied to one brand, right? Like, Gucci goes out, the row goes in, fine. Like they're going to try to source more row and less Gucci, like as opposed to trying to, pick one horse within this world. So, and people buy more jewelry and less bags right now. That's the trend. More jewelry and watches, less bags. And I think ready to wear is starting to come back a bit, but like they can adjust to that too. So it's a pretty good business model. It's got competition for sure, but this is something where the internet was a true game changer in taking, very fragmented inventory and consolidating it. It was kind of like a little bit like Amazon in the books in the very beginning, taking something that was, really impossible offline, but that works online.
Yeah.
All right.
Yep.
Good stuff. So Real long, Reddit long, IMAX long, Snap not so much. We'll be back
I'm long
tomorrow.
about half those. Yeah, that more or
Okay.
less there. That's where we are.
All right, guys. Thank you.
That's
Thanks for
good.
joining us on Wall Street Beats, everybody. We'll be back here tomorrow. Have a great day. Thanks, guys.
Guys.